What is considered material participation? Have you ever wondered what it really means to materially participate in a business or rental property? This concept is key when it comes to tax deductions, especially under the passive activity loss rules. Let's break it down in a straightforward way. Material participation refers to how involved you are in an income-producing activity. It helps determine if your losses from that activity can be fully deducted on your tax return or if they are limited. If you materially participate, you can deduct the full amount of losses. If not, you face restrictions on those deductions. The Internal Revenue Service has established 7 tests to figure out if you materially participate. You only need to meet one of these tests to qualify. First, if you spend more than 500 hours on the activity during the tax year, you pass the first test. This is a clear indicator of active involvement. Second, if your participation makes up substantially all of the activity, you also qualify. This means you are the main person running the show. Third, if you put in more than 100 hours and no one else spends more time than you meet another test. Fourth, the IRS looks at all the facts and circumstances. If your involvement is regular, continuous, and substantial, you could be considered a material participant. Fifth, if you are involved in multiple activities that together exceed 500 hours, that counts too. Sixth, if you materially participated in the activity for any 5 of the last 10 years, you qualify. Lastly, if you materially participated in a personal service activity for any 3 of the last 3 years, you meet the requirement. Now, why does this matter for rental properties? If you materially participate in managing your rental property, you can deduct losses without facing the passive activity loss limitations. This can significantly lower your tax bill. For example, if you spend more than 500 hours managing your rental property, you can deduct any losses from that property. However, if you do not meet any of the material participation tests, you will be subject to the passive activity rules. This means your ability to deduct losses will be limited. Understanding material participation is essential for maximizing your tax deductions and ensuring you comply with tax laws. Knowing these tests can help you make informed decisions about your rental properties and other income-producing activities.